Yeah, the big thing about stagflation and why the average person needs to understand it is the Fed, in my opinion, has very kind of dull or muted tools.
Yep.
And these tools, they can fight inflation or they can help with a struggling economy.
Mhm.
They can't do both. They can't
Yeah.
fight two battles. Stagflation. According to Jerome Powell, he doesn't see the stag or the flation. I would argue that the numbers are not looking good for that call. That may go down as his next transitory comment. We're going to have a conversation with Taylor from Life Goal Investments and ask him if he sees the stag or the flation. How you doing, Taylor?
Doing great. It's interesting. That comment, I didn't actually see that comment live. I had a call that popped up and I had to jump on it. I didn't see that comment, but I was actually thinking that his comments were alluding to the fact that stagflation is possible, because for the first time in that meeting, when he said that, he talked about a potential meaningful uptick in unemployment. And by the way, the inflation numbers were coming in ugly at that point. So you
They
have
were.
ugly inflationary numbers, and you have him talking on the other side about the concern about a rise of unemployment. And then he says he doesn't see the stag or the flation. That is the stagflation word is a boogeyman. They
It
cannot
is.
use that. That would send the market into an absolute frenzy. So they're
Right.
staying away from it. But that doesn't mean they're not absolutely concerned about it.
Yeah. Well, let's do our audience a favor. You and I play in this game all the time. We're familiar with these terms, but why don't you take a shot at kind of defining what stagflation is, and then we'll dive into why it is such a problem.
Yep. So stagflation is going to be the combination of high inflation or increasing inflation with economic growth trending downwards. And so, if you look at last year versus this year, you absolutely have inflation that's increased. And I'm not saying it's 2022 levels where it's shooting through the moon, but it's trended upwards. There's no doubt about it. And you have seen economic growth curtail and come back down. Now, we'll still see what Q2 looks like, but Q1 was not a pretty print. And it certainly was slower than it was in 2023.
Yeah, it's really funny because when he made that comment, he doesn't see the stag or the flation. I was like, ooh, that's going to hurt. And fast forward 60 days, talk about Q1. When he made that comment, Q1 GDP print was 3.5%. The first revision, 1.7.
Yep.
That's more than a 50% cut in Q1. Q2 GDP now had Q2 GDP at something like 3.5 or 3%. It's now sub 2%.
It got all the way to 3.9.
Dude, it got all the way to 3.9. It's now
Yeah.
sub 2. The economy is starting to feel below trend growth and slowing. So
It
there's the
is.
stag.
Yeah. Yeah. So there's the stag, right? So, and I think that that's fair to say. Like, listen, by the way, there was a point where the Federal Reserve made this huge pivot and shift. And they went from saying, we are trying to slow this economy by raising interest rates and slowing down the flow of money via mortgages, via credit card debt rates being higher, et cetera. And we need to slow it down. And by the way, you're probably going to see an uptick in unemployment.
Mm-hmm.
To, hey, look at what we've done. And now we are Michael Jordan in his prime, and we're actually able to increase interest rates, not slow the economy, and not increase unemployment. It's like, since when in history have we been able to do all of that at the same time? Because
Right.
I've read the books, I haven't found it.
I haven't found it either. I've been studying this for a long, long time. So if we've already, I really do think we're heading into that, at least that stag environment. So let's talk about inflation. Again, it's really weird. When he made that comment, we had like 7 or 8 inflation prints that were the wrong way. They were ugly.
Consistent,
I'm
consistent.
are you just bold-faced lying? Are you not? I mean, like, do you have some kind of secret, looking into the future stuff? It was weird. Now, in fairness, he was right. I mean, inflation prints have been better since that, right? The stag we saw, the inflation's getting a little bit better, but that seems like a ballsy call, right?
I think that was a comment that he heard at a party, and he was
Yeah,
like,
he's like, oh, that's
dude,
good.
I'm going to roll that one out here one of these days.
You're probably right. Somebody whispered it. He heard over. He's like, oh, that's a good one. I'm going to roll that into my speech. Yeah, he's going to he's that's the, inflation is transitory comment. It's going to be wild. But
Yeah, and
here's the,
the other point, I'll just compound his naivety a little bit further and say, even though we had seen 7 or 8, whatever it was, of 9 trending upwards at that point in time on the inflationary front, it comes off the heels of basically 6 months, more than 6 months of
Yeah.
inflation chopping just sideways. It
Yeah.
did come down, don't get me wrong, then it chopped sideways. And
Yeah.
so I don't know how you could say with any confidence that inflation was under control. And that goes back to, one of the prior video comments I made, that at the end of last year, I think that they didn't do a good job saying that, listen, we still see interest rate cuts on the table. It should have been, there could possibly be interest rate cuts on the table, but inflation isn't trending the way it was before. And now we're not as sure.
Yeah. Yeah. I love that. So the last thing, let's help people understand why stagflation is the boogeyman, because again, a lot of people may not understand, why stagflation. I think it was Charlie Munger. Actually, I know it was Charlie Munger. Charlie Munger said this shortly before he passed. He basically said, I don't have the quote in front of me, but basically says, be careful what you wish for. You might wish for a nasty recession instead of what you're going to get, stagflation.
Yeah.
So why is stagflation so much nastier than just an all-out recession?
Yeah, so I'll break the economy down into 4 quadrants, and this is typically the pattern that the economy follows. So you start out in growth, and growth typically lasts the longest period of time, and that's when the economy continues to chug along, inflation remains relatively subdued, and then you graduate into inflation, where all of a sudden growth becomes too heavy, people make too much money, they go out and start competing on buying things, and it forces up inflation. And then the stagflation is kind of the third quadrant, if you will, where all of a sudden, okay, prices have gotten too high and people can no longer afford to keep up with it. And by the way, you can see that showing through in Starbucks and McDonald's in these anti-spend trends that are now
Yeah.
going around wildly on the internet. People are like, hey, we need to stop spending and we're going to start this riot about this. And so that's kind of what seems to be playing out there, is things are just too expensive. And so people don't buy. And what happens is the economy starts to peter out a little bit. And then it graduates into weak growth or recessionary territory where, okay, just outright growth becomes negative and we fully reset the scale. And then you graduate back into growth. And that kind of cycle compounds itself over time. And it doesn't always perfectly follow that trajectory, but that's typically how it works. Now, a prolonged period of stagflation is very tough. And it's something that we haven't seen since the 1970s. And everyone knows that now because it's been talked about ad nauseum. But if you look at the decade of the 70s, you had very few assets that did well. Your asset class did very, very well relative to the broad, overarching assets that you could invest in. Real estate did incredibly well, and oil did incredibly well. And why is that? Because they are things, real estate, if inflation goes up, what do you do with rents? You just tick them up along the way. On the other side, oil was one of the causes for inflation. And so thus the increase in price, kind of happened to be that was a really good investment at the time. And oil is often the cause of inflation. Now, oil is going to be different this time around, in my opinion. Now, this is, again, my humble opinion, but I will tell you why. We as the United States have access to oil. We are now a net exporter. We learned what fracking was out of basic necessity of us not being able to be reliant upon importing oil from places that we don't necessarily trust the other side of it. So we now can drill down into rock horizontally, not just vertically, and find pockets in the shale of natural gas, et cetera, extract it out and sell it around the world. And so that is the big game changer. The big cause for the stagflationary environment in the 1970s, and I will shut up in a second, I know I'm going long, is the oil embargo, right? So similar situation to what's playing out right now, where Israel had a problem with the Arab nations. We stepped in and sided with Israel, and the Arab nations said, screw you, US, we're not going to export oil to you anymore. And oil and gas prices literally quadrupled. And that's what forced people to not be able to afford things, et cetera. And the stagflationary trends then came after that. But now we aren't as dependent overseas on external oil sources. So that'll be different this time around, in my opinion.
Yeah, the big thing about stagflation and why the average person needs to understand it is the Fed, in my opinion, has very kind of dull or muted tools.
Yep.
And these tools, they can fight inflation or they can help with the struggling economy.
Mm-hmm.
They can't do both. They can't
Yeah.
fight two battles, right?
Yeah.
They can cut interest rates, they can raise interest rates.
Yep.
If you're in stagflation, if you're in the stag, you want to cut rates. If
Correct.
you're in the inflation, you want to raise rates. And stagflation is that nasty outcome where at least the existing Fed tools, not a great fit. And the answer often is time
Yep.
to kind of get through
You're
it.
100% correct. That's called rock in a hard place, right?
Yeah,
And
not good.
that's where they find themselves. And I think that there is a little bit more in their quiver, right? So they can do
Sure.
targeted purchases, so they can get, a little bit more, dissect the economy and say, "Hey, we're going to try to stimulate housing or something like that by
Yeah.
buying down mortgage rates and paying a portion of this, whatever it might be." But yes, to your broad point, it is a tough macroeconomic backdrop to face.
Yeah. And this is why, in my opinion, Paul Volcker took rates to 18%. He was tired of stagflation.
He said,
He's
"F
like,
it."
F it. We're going to just cause a nasty 1981 recession. I know it's going to be painful. I know it's going to be hurt. But when we get to the other side, I can fix it.
Correct. And if inflation gets nasty and entrenched and repossesses or resurfaces, you might see the same thing. Because to your point, you want to sit in that chop sideways type stagflationary environment over the long term. So stocks, and I know that they don't, the Federal Reserve is not a slave to the stock market or the bond market or anything like that. But if you just want to look at the performance of asset classes, the 1970s, stocks were down 16% on a real return. So after
Yeah.
adjusting for inflation basis, throughout that decade, bonds were down 33%. That's the safe asset class. Bonds were down
Ugly.
33% on a real return basis. So it was brutal. But to your point, that's why you own real estate. Like with our investors that we invest money on behalf of, it's real estate, it's oil, it's farmland, it's timber forests, it's critical infrastructure. It's those things, hard, tangible things you can put your hands on because
Yeah.
that's what you want. Some of them have inflation riders, some of them just outright benefit from inflation. You need those things to counterparty balance your stock and bond exposure.
There you go. Thank you so much. You do a lot of great 60-second education. Where can people find it?
Yeah, find us at Life Goal Investments. We're on both Instagram and on TikTok daily.
Awesome. Thank you so much.